Hidden banking secrets that give smart investors an edge. If you have over $100,000 invested and still feel like your money isn't working as hard as it should, this video is going to change the way you see your entire financial life. Because the truth is, the financial system is not broken. It's working exactly as designed, just not for you. And today, we're going to break down 10 hidden mechanics of banking and investing that most people never fully understand, and more importantly, how smart investors use these same mechanics to protect capital, reduce taxes, and grow wealth without taking unnecessary risks. And make sure you stay until the end, because the strategy around borrowing against assets is one of the most powerful wealth-building tools in the world, and almost nobody explains it properly. Let's get into it. Before we jump into the secrets, you need to understand one thing. The system you operate in was not designed to make you wealthy. It was designed to keep money moving, generate profit for institutions, and reward those who understand it, while quietly extracting from those who don't. And that might sound negative, but it's actually empowering. Because once you understand the rules, you stop playing blindly and start playing strategically. Let's start with something that feels safe, but is quietly costing you more than almost any bad investment you've ever made: your savings account. When you deposit money into a savings account, you might earn 0.5%, maybe 1% if you're lucky, but inflation? 2%, 3%, sometimes much higher. Which means every year your money is sitting there, it's losing purchasing power. Slowly, silently, consistently. Now here's the part most people ignore. Your bank is taking that same money and lending it out at 15, 20, even 25%. That difference is profit, not for you, for them. Smart investors understand this. They don't leave large amounts of money sitting idle. They separate their money into 3 categories: liquidity for short-term needs, growth for long-term appreciation, and income for consistent cash flow. And once you start thinking that way, everything changes.
Now here's something that sounds like a conspiracy theory until you actually understand how it works. Banks don't just store money, they create it. When you deposit $1,000 into a bank, they don't keep all of it, they lend most of it out. That money gets deposited somewhere else and then lent out again, and again, and again. Your original $1,000 can turn into several thousand circulating through the system. This is called fractional reserve banking, and what it really means is this: money itself isn't scarce, access to capital is. And the people who understand how to access cheap capital win. Now let's talk about one of the most profitable systems ever created: credit cards. There's nothing inherently wrong with a credit card. Used correctly, it's a powerful tool. It builds credit, it earns rewards, it gives you protection. But it's engineered to be misused. The average interest rate? Around 20%. That means if you carry a balance, you're losing, guaranteed. Because there is almost no investment in the world that consistently returns 20%. And the minimum payment system? It's designed to keep you in debt as long as possible. Smart investors use credit cards very differently. They spend strategically, collect rewards, and pay the balance in full every single month. No exceptions. Because the moment you carry a balance, the bank wins. Now this next concept is where everything starts to shift. Because wealthy investors don't think about money the same way most people do. Most people think, if I need cash, I sell something. Wealthy investors think, if I need cash, I borrow. Let's say you have a $1 million portfolio. Instead of selling your investments and triggering taxes, you borrow against them. You take out, say, $100,000 at a low interest rate. Your investments stay intact, they continue growing, and you avoid a taxable event. So now you have liquidity without losing your assets and without paying unnecessary taxes. This strategy is often called buy, borrow, die.
And it's one of the most powerful wealth-building frameworks in existence. If you want a structured breakdown of how to actually apply strategies like this to your own portfolio, I've put together a full framework that walks through asset allocation, tax strategy, and income structuring step by step. You'll find it in the description. Now let's talk about something almost everyone has, but very few people truly understand: your mortgage. A $300,000 home can easily turn into $500,000 or $600,000 paid over time, and a huge portion of that is interest. This doesn't mean mortgages are bad. It means you need to use them strategically. Making extra principal payments, refinancing when rates drop, avoiding over-leveraging, these small decisions can save tens or even hundreds of thousands over time. Real estate can absolutely build wealth, but only if you control the terms. Now here's something most people underestimate: fees. Overdraft fees, ATM fees, maintenance fees, transaction fees. Individually, they seem small, but over time, they add up to thousands. And here's the key idea: every dollar you save in fees is a guaranteed return. No risk, no volatility. Smart investors minimize these aggressively. They choose better accounts, they monitor their activity, they eliminate unnecessary charges, because leaks matter. Now let's talk about something that explains a lot about the world we live in: interest rates. If you have strong credit, assets, and income, you get access to cheaper money. If you don't, you pay more. That difference changes everything, because cheap capital allows you to grow faster. Expensive capital slows you down, which means your credit profile isn't just a number, it's leverage. And improving it can completely change your financial trajectory. Now here's something that most people don't fully understand, but plays a massive role in wealth building: taxes. The wealthy don't just focus on earning more, they focus on keeping more through structuring, timing, and asset selection. Even small improvements in tax efficiency can dramatically increase long-term returns, and the difference compounds over time. Now here's one of the most important patterns in the entire system. Most people were never taught how money actually works. Not in school, not in most environments. And that gap is where institutions profit. Because confusion leads to bad decisions, and bad decisions generate revenue for someone else. Smart investors close that gap. They learn, they question, they understand the tools they're using. Because once you understand the system, it becomes much harder for it to work against you. And finally, there's one more thing you need to understand. The entire financial system runs on confidence. Banks don't keep all deposits available. They rely on the fact that most people won't withdraw at the same time.
And most of the time, that works. But it also means smart investors don't rely on a single institution. They diversify. They stay within insured limits. They reduce concentration risk, not out of fear, but out of awareness. So, what does all of this actually mean for you? It means the game is not about working harder, it's about playing smarter. Start by optimizing your cash. Don't let it sit idle, losing value. Eliminate high-interest debt. That's your biggest guaranteed loss. Build assets that grow and generate income. Use debt strategically, not emotionally. And position yourself to access cheaper capital over time. Because the people who consistently build wealth aren't necessarily smarter. They're just operating with a different level of understanding. And now, so are you. If you're serious about restructuring your portfolio for stability and long-term growth, the next step is applying this properly. I've created a complete system that shows exactly how to do that, including the strategies most advisors never explain. You'll find it below. And before you go, which one of these completely changed how you think about money? Drop it in the comments. And if you want more content like this, make sure you subscribe, because now you're playing a different game. Most people will watch this and go right back to the same habits. A small percentage will take action and quietly change their financial future. Decide which one you are. If you're choosing growth, like the video, share it with someone who needs it, and subscribe. Because this channel is built for people who care about real progress, not visible success.